In my 10 years of trading experience, I have used many indicators, learned many trading systems. But breakout trading is one of my favorite trading systems. I don't give any fancy statements to explain why I liked this system. Below are the 3 reasons behind my fondness for this system. 1. I have developed this system with my way of collecting information. 2. It is simple to understand and easy to execute. All you need is 5 minutes during live market. And 3. It shows results. Nowadays, I use this system rarely as I have transited into intraday trading. Besides, I'm an avid traveler and blogger, and I often end up doing a lot of adventurous activities. Hence, I do not prefer to carry on trades post-market hours. However, I have been teaching this technique to numerous people who have benefited from my advice. This book is beneficial if you are a working professional or a business person and have the mindset to hold your trades between 2 days to 2 weeks. For everyone else, it's just a piece of some information. I have explained only the concepts which are required for breakout trading. Please refer to the last page if you need excellent book information for any other trading topic. So, let's begin. Breakout trading is the most underrated trading technique. How to differentiate a genuine breakout from a false breakout? This question was running in my mind for many years. Back then, I was working in a software firm and I used to attend several workshops on trading during weekends just to ask this one question. I was pretty sure if I can crack this question, it will help immensely in both positional trading as well as intraday trading. However, I didn't get any satisfactory answers from most of the trainers. One such weekend, I was attending a 2-day workshop on trading from a famous technical trader in India. I thought this time I will get the answer to my question. He was explaining most of the concepts related to trading. However, I was waiting for a chance for my inquiry. Even after 1.5 days, I didn't get an opportunity to ask my question, and many participants surrounded him during lunch and coffee breaks. Time was ticking, and I just had one last hour. From my experience, I knew trainers leave early on Sunday evening with an excuse of catching flights. He was still explaining some concept, assuming I might not get an opportunity to clarify my doubt over a Q&A session, if there was any. I gathered some courage to interrupt his speech in the middle with my question. I was hoping he will explain the answer using charts. To my surprise, he switched off the projector and came forward. Then he started telling how his big connections in Mumbai and Wall Street trade, how they take large quantities, how they consider auspicious days like a full moon day or Diwali and take into account the rise in sea level to add their quantity. Finally, he concluded most of the breakout days in any script closely associated with such good days or a good day related to a particular script. I was frustrated by his answer. I was angry at myself for wasting 2 days of my life, and I had decided not to attend any workshop on trading going forward. With this state of mind, I went to a remote place inside the Western Ghats in Karnataka, India. It had an old temple, and somehow I felt positive vibes in the area. The next day morning, I woke up early and went for a walk. After the hike, I went inside the temple and meditated for some time. When I was coming back to the guest house, I saw a mother chicken roaming with its baby chicks. All the baby chicks were following the mother except one. Sometimes it was leading the group, and sometimes it was going far away from the group. Sometimes mother chicken used to follow that baby chick along with its other baby chicks. Without my consciousness, I stopped my walk and started observing the activity. Within a minute, I got the answer to my question. It was unbelievable that I found the solution to my problem, which was haunting me for several years. Unfortunately, I didn't carry my laptop with me, but I was impatient to wait there. Hence, I checked out from the guest house and drove back to my place. It was over 400-kilometer drive and I didn't take a single break in between. Once I reached my home, I immediately had started to check my findings on the chart. Fortunately, my idea was correct. Except for this first chapter, the remaining content of the book is a detailed expansion of one single idea. Hello and welcome. You are listening to Cuckoo FM, and today we bring to you How to Make Money with Breakout Trading by Indrajit Shantaraj, voiced by Arpita Vora. Cuckoo FM, सुने जो मन चाहे. What is a breakout? Investopedia website says, a breakout is a stock price moving outside a defined support or resistance level with increased volume. A breakout trader enters a long position after the stock price breaks above resistance or enters a short position after the stock breaks below support. In image 1.1, the price broke the resistance trend line with high volumes. Similarly, if the price breaks the support trend line, few recognize it as a breakdown. To keep it simple, we will focus only on the breakout. What is a false breakout? A false breakout is also recognized as a failed break. Investopedia.com's definition for a failed break is: a failed break occurs when a price moves through an identified level of support or resistance but does not have enough momentum to maintain its direction. Since the validity of the breakout is compromised and the profit potential significantly decreases, many traders close their positions. A failed break is also commonly referred to as a false breakout. In image 1.2, the price showed the characteristics of a breakout. However, it failed in its attempt and broke on the opposite side. Why is this information important? In my opinion, every trader, be it intraday, swing, positional or scalper, should know how to differentiate a genuine breakout and a false breakout. Do you know why? Because every entry and exit in any trade should come through a breakout or false breakout opportunity. That does not mean other trading techniques won't work. My explanation holds good if a trader is looking for the best entry point and best exit point. Let me explain. It is important to understand two herds that exist in the market. 1. Smart money, and 2. Dumb money. Smart money refers to institutional investors, big sharks who have money and information power, who give direction and momentum to markets. Dumb money refers to non-professional traders, retail traders who often try to make quick money. Do you agree that it's always a good idea to follow the smart money? If yes, check the below chart carefully. If you look at the image 1.3, the smart money has prevented the fall 3 times with significant buying volumes. Besides, the price has consolidated for over 8 trading days before the breakout. It indicates 2 things. 1. Smart money is not willing to sell at this price level. 2. Dumb money got exhausted with its selling. If you look at image 1.4, it's evident that smart money had a clear action plan. So it's always better to take entry when we get the confirmation from smart money. You can't make trades along with them unless you are one among them. Besides, it's significant to plan exit if you can judge smart money is exiting. A trading system should accommodate such entry and exit points, because only entry and exit decide the fate of your trade irrespective of your reputation, experience, and qualification. This breakout trading system consists of 3 critical components. 1. Drawing proper trend lines. 2. Identification of real breakout. And 3. Trade execution. I will explain these concepts in detail in the subsequent chapters.
Bitch, I'm outside of some movie. Blue cheese, I swear I'm addicted to blue cheese. I gotta stick to this paper like blue sleep. Bitch, I'm by my chicken like it's